Hey everybody, Happy New Year's. It's Jeff Adams. I have a special webinar. My guest is Patrick James. Now he's going to talk about something that's very timely right now, and that is paying Uncle Sam. Now I can tell you this, I pay my fair share of taxes every single year, but if I can save money on my taxes and give that money to my family, say for college education for my kids, take trips and so forth, I'd rather do that. I'm sure you'd rather do that as well. Now my special guest here is Patrick James. Patrick is America's #1 tax educator, and on top of that, he's President and CEO of Tax Strategy Solutions Incorporated. He has dedicated his entire career to helping create and preserve wealth through knowledge. His marketing expertise was instrumental in launching a tax deduction program with Scott Estell, a former senior trial attorney for the IRS. Now together, Patrick and Scott created a toolkit to teach people how to take advantage of every possible tax deduction in order to minimize tax liabilities and maximize tax deductions. Now Patrick, on top of that, he used to be a school teacher, and he's a graduate of the University of Portland in 1986. In 1997, he became president of a national speaking firm which specializes in financial education. Patrick's been a guest on more than 100 radio and television talk shows and was featured on Explanations, Newsweek, and It's Your Money, New York Times bestseller. He has spoken at conferences with Alan Greenspan, Donald Trump, George Foreman, Robert Kiyosaki, Tony Robbins, Magic Johnson, and many others. He was also recipient of the Businessman of the Year of 2000. And on top of that, Patrick is a real estate investor just like us. He's America's #1 tax deduction and tax savings educator. And I can tell you this, I've known Patrick for many years. I've met a lot of his students that implement his systems. Patrick, are you there?
I sure am. How you doing?
Good, Patrick, doing really good here. Question for you, Patrick. How many people have you helped out through the years?
Jeff, it's been literally hundreds of thousands. I've been teaching tax strategies for about the last 13 years. And, you know, we've spoken at conferences with Donald Trump in front of 70, 80,000 people before. So it's in the hundreds of thousands of people.
Wow, that's awesome. That's awesome. Now, how thick is a tax code?
You know, the tax code's amazing. I was just researching this the other day, and in 1914, the tax code was 400 pages, okay? This year, it's over 76,000 pages. Over 76,000. Can you believe that?
Wow, that's amazing.
Yeah, nobody understands it all.
I know, that's crazy. Well, I'll tell you what, folks, I can tell you a lot of our students have used Patrick James throughout the years. It has taken me the last 6-7 months just to get them on our call here. This couldn't be timely enough with tax season here right now. And with that being said, Patrick, I'm going to go ahead and let you take it away.
I appreciate that, Jeff. Thank you very much. And what we're going to do is I'm going to spend the next hour or so teaching you exactly how to capture all the deductions you're legally entitled to. Okay, Jeff, let's get started here in just a second. I need to put on my headset, and so I'll have my hands free so I can go through these slides with everybody. So give me just a second, and we'll get started here.
Again, I'd like to thank everybody for being on this webinar. And what we're going to do is I'm going to show you some copies of my tax returns to show you what I've been able to do. But most importantly, I'm going to teach you how to take advantage of all the different tax deductions that Congress allows to help you save money on your taxes. So let's go ahead and get started here. And I met the former senior trial attorney for the IRS back in 1999, and I'm going to start with 1998 because that's when I had my mom and dad's accountant prepare my tax returns for me. And back in 98, I made about $82,538, paid $20,000 in income tax, and then I received a refund of about $5,000. So I was actually into the IRS about $15,000 when it was all said and done. This is important because I'm going to show you at the end how you can actually get money back from the IRS on taxes that you've overpaid in previous years. You see, Congress passed a law that says any money that you've overpaid in your taxes over the last 3 years, you can go back and reclaim the deductions and get your refund back on money that you accidentally overpaid because you didn't know of all the deductions. Well, the bottom line here is I eventually, 2.5 years later, got my entire $15,000 back that I had paid in. So I'm going to show you guys how you can do that also. Well, This screen says sometimes it's not what you know, but who you know. This is a really good friend of mine. His name's Stan Barker, and he's the one that introduced me to the former senior trial attorney for the IRS. Okay? And it was back in 1999 when I met Scott, the former senior trial attorney for the IRS. Stan introduced me to him and absolutely changed my life financially as far as my taxes go, no question about it. So here's a picture of Scott. He's the former senior trial attorney for the IRS. He lives in Colorado. I'm over here in Washington State. So I called him on the phone and talked with him, and he told me that he could help me out on my taxes. And so I asked him, how much are you going to charge? And he said, well, I charge a $4,000 retainer and about $400 an hour. And I said, well, I don't think I want to hire you, because I didn't know if he was talking about 4 hours or 400 hours. I mean, you have no idea. And finally, the bottom line is I was able to just pay him about $4,000, and he helped me out on everything. So I did hire him, and here's what happened on my tax returns the following year. In 1999, I made just about $80,000 again. Now, these are my personal tax returns. I'll show you the corporate tax returns in a second. So 99, I paid myself just about $80,000 again, just like I did the previous year. And when you learn how to take all the tax deductions that you're legally entitled to and categorize things the right way, watch this. Taxes due, $19. So that's what I'm going to teach you on this webinar how to do. As far as my more recent tax returns go, here's one from 2008. It shows $101,000. Again, this is my personal tax return. Well, I don't have $101,000 of deductions. I had a lot, but not quite that many. So bottom line is my taxable income was $9,350 after being able to deduct the kids and everything else I could come up with. However, there is something called a tax credit. And a tax credit is a lot different than a tax deduction. A tax deduction, you get to subtract off of what your taxable income is. So it just lowers what your income is that you're going to be taxed on. A tax credit gets subtracted off of what you owe the IRS in taxes. So tax credit is great. Well, because I had kids, there was a child tax credit that was good for up to $1,000 this year. And my taxes that I owed were $938. My taxable income, $9,350. So the taxes I owed were $938. Well, I got this tax credit that was good for up to $1,000. So I took $938 of it, and lo and behold, federal income tax due, $0. So I'm going to show you guys how to do all this. So just stick with me a little bit. Here's one of my corporate tax returns. This is my 1999 business return. This is when I met Scott and had him help me on all my stuff. Again, my total income in the corporation was $244,921. Taxes due, $3,500. That's not too bad on almost $250,000. It's all about how you categorize your expenses. Congress passes all the tax laws. The IRS, they don't pass the tax laws. Congress does. And it's our job to follow these laws. The problem is nobody ever tells us about them. And with the tax code being over 78,000 pages thick, it's so convoluted and so messed up, nobody really understands it all. But I'm going to do my best to teach you guys how your tax returns can kind of look like this also. Here's a more recent business return of mine. This is one of my companies that I own. And this one shows just under $1 million, $905,000 of income that year. And taxes due, $1,700. So anyway, as long as you follow the laws that Congress passes, you're going to be okay. So I need to teach you how to do that. Here's another letter that somebody got that Scott got involved with, and because Scott handles a lot of audits also. And this one says, I owed the IRS $84,123.55. Obviously, the name's been blacked out here. So thanks to Scott, after the changes, I owed nothing and received a check for $117. Look at this. Account balance before this change, $84,000 due. And then credit, 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 credit. Amount to be refunded to you, $117. So Scott's a pretty good guy to know when it comes to taxes, no question about it. So here's where I want to get started in teaching you guys how to do all this. According to the IRS, okay, what you need to do in order to qualify for literally hundreds of different tax deductions is you need to have the intent to make a profit. It doesn't say you need to make a profit, it says you need to have the intent to make a profit. And you need to be doing something in your life with the intent to make a profit. And hopefully all of you that are on this webinar are doing something like that. So if you have the intent to make a profit, you're going to be able to capture hundreds of more tax deductions. Why is that important? Because the national average is about 30% of all the money that you earn goes to pay Uncle Sam. So for every dollar that you earn that you do not deduct on your taxes, you have to reach into your pocket and pull out an additional 30 cents and pay Uncle Sam that additional 30 cents on the dollar. And if you don't believe me, go look at your pay stubs. Look at how much money you really made, and then look at how much money you get to keep. So it's 30 cents on the dollar. So it's like this. $10 at Starbucks isn't really $10 at Starbucks. It's going to be 13. $10 to Starbucks, $3 to the government. Unless you can write off that $10 at Starbucks, which most people cannot do. Everywhere I go, I talk to people about this and say, how are you going to write off the $10 at Starbucks if you spend $10? And they say, well, if you talk about business. And the answer is no, that does not make it tax deductible. Absolutely not. In fact, the IRS, they really don't care what you talk about. What they care about is what was your intent in going there in the first place. So if I met up with Jim and I said, Jim, so good to see you. I haven't seen you in 5 years. How you doing? Hey, let's go to Starbucks. I'll buy you a cup of coffee. We can catch up on old times. That's not tax deductible. We're catching up on old times. Even if we start talking about business there, it is still not tax deductible because our intent was to catch up on old times. However, if I saw Jim and said, hey Jim, so good to see you. Haven't seen you in 5 years. How's the family doing? Hey, how about if I buy you a cup of coffee at Starbucks? I have some real estate stuff I'd like to talk to you about. And now my intent is to talk to him about real estate at Starbucks. And there's no time limit. We can talk about real estate for 45 minutes. We can talk about real estate for 45 seconds. We actually don't even have to talk about real estate at all. But if my intent was to talk to him about real estate to hopefully maybe get a lead or get a client or something like that, then that $10 at Starbucks is 100% tax deductible. So that's what that is. Here's the way the law reads. It says, if your intent is to make a profit, any meals or entertainment within 24 hours of a business discussion can be tax deductible. Now, this doesn't say 24 hours before or 24 hours after. It just says within 24 hours. So it's actually a 48-hour window. Well, if I told Jim, let's go to Starbucks and talk about real estate, guess what? Now the cost is, or the score, would be Starbucks 10, government 0. Because I get the tax deduction, I don't have to reach into my pocket and pull that extra $3 out to pay the government. So any meals or entertainment within the 24 hours of your business meeting, okay, as long as your intent was to have a business meeting or to make a profit, any meals or entertainment can be tax deductible. So that's a great one. Meals and entertainment also are both only 50% deductible. It's called the 50% rule. However, meals that are considered to be catered are 100% deductible. So if you have a business meeting at your house and you order out from, you call 1-800-Domino's or something, and it's delivered to your house, that would be 100% deductible because it's considered catered. However, if you go out to eat and you sit down at a restaurant somewhere for a business meeting, then it would only be 50% deductible. Here's another one. If you purchased a new or used vehicle in the past 4 years, and the GVWR, the weight of the vehicle, is over 6,000 pounds, you can actually be entitled to up to a $25,000 tax deduction. Now, a $25,000 tax deduction is about $8,000 in your pocket. The way this works is, when we're done with this webinar, I want you to go look at your car, open up the driver's side door, and there's a little piece of paper stuck on the door jamb. It tells you what PSI to inflate your tires to and stuff. But what you want to do is you want to look and see what the GVWR number is. Because if the vehicle is rated at over 6,000 pounds, you can actually be entitled to up to a $25,000 tax deduction. And the reason I said you can go back over the past 4 years is, remember I told you just a minute ago that Congress passed a law that says you can go back over the last 3 years of your tax returns, and any tax deductions you've missed, you can reclaim those, and they're required by law to refund your money to you. Well, guess what? The tax return that you did 3 years ago was 4 years ago, because you have to wait till the end of the year before you can even file your tax return. So any of you on this call that bought a new or used car within the last 4 years, I want you to check that GVWR number, because you might be entitled to a huge tax deduction that you weren't even aware you were going to get. So here's another one. You can rent your house for up to 14 days per year, and you don't have to report the income. It is absolutely 100% free money to you. So, well, who are you going to rent your house to? Well, lots of people will rent your house. Maybe you need to rent it because you're having a corporate business meeting there. Or maybe you're renting it because somebody's coming into town and you're having a business meeting with them, and you're going to rent your house to them, or rent a bedroom in your house to them, rather than having them stay in a hotel. There's lots of different options here. So we'll talk more about that in a minute. So here's the 2 words that the IRS looks at. These are the 2 most important words, you guys. And the first one is intent, and the second one is reasonable. Is what you're doing reasonable? Well, let's learn how to get some tax deductible entertainment. First of all, golf can be considered entertainment. Well, it is if you're watching me anyway. This is a golf course up in the Pacific Northwest, right where I live. And that guy on the left that just missed that putt, that's Scott, the former senior trial attorney for the IRS. And I'm over there on the right-hand side in the white hat, and there's a friend of mine, Joey, who's in the red baseball hat. Joey is my mentor in investing in the stock market, and so I called Joey on the phone. He lives out of town. I called him and said, "Hey Joey, how would you like to come up for the weekend, and we can do some stock market stuff and whatnot?" And he said, "That sounds great." And so then I got a hold of Scott and said, "Hey Scott, Joey's coming to town." Now Joey is a client of Scott's also, so they know each other. And we're going to go over a bunch of stock market strategies and some different things. Would you like to come? And he said, "Yeah, when is it?" So Scott flew to town also. Well, they were going to stay at the Marriott Hotel in downtown Seattle. And I said, no, you guys can stay at my house, that way I don't have to pick you up from the hotel and whatnot. And rather than paying the hotel, you can pay me. So I charged them $200 a night to stay at my house. So see, that's a way you can rent your house out. So they both came, and there were 3 nights, and we went golfing, and we went out to eat. All of that was tax deductible because it was all based around a business meeting. So here's a picture of my wife and I in Hawaii. Now, we are not on vacation. We're having a business meeting there, because who gets to decide where you have your business meetings? Well, you get to decide. And so we decided to have a business meeting in Hawaii. According to the IRS, that's considered to be reasonable, and so we did. And there's no rule that says you can't have fun at a business meeting. No rule on that at all. So you get to choose where you have your business meetings. Business meetings are tax deductible, vacations are not. This just happens to be my floating office. And there's no law that says your office cannot float. So we have a floating office also. Well, how can you deduct child-related expenses like tuition for school or school clothes or movies or sporting events, or if they want to take piano lessons, or if they want to go out to pizza or birthday. None of that stuff's tax deductible, folks. You can't write off any of it, okay, unless you know how. So what we're going to do is we're going to take two laws that Congress passed, and we're going to merge them together, and we're going to come up with a new tax deduction, basically. So the first law says minors, kids that are under 18 years old, can earn up to $5,900 per year tax-free. And then Congress passed a law that says you can deduct the amount you pay your kids for working for you. And so if you hire your kids to work for you, you get to deduct that off your taxes. If they earn less than $5,900 a year, they earn that money tax-free, basically. So what we do is I hire my kids to do all kinds of stuff for the business, and I pay them for it. So I have a piece of paper on the refrigerator that has all these jobs listed by it. And the kids do the jobs. At the end of the month, I take that piece of paper off the refrigerator, total everything up, I write each one of the kids a check, go to the bank and deposit those checks in each of the kids' separate savings accounts. Now, all the money that I deposit in their savings accounts is tax deductible to me. And as long as they earn less than $5,900 a year, they don't have to pay any taxes. So where do you think we get the money to pay for tuition for private school? Right out of their savings accounts. And the money that was put in there was tax deductible to me. Now, in essence, tuition has become tax deductible. Or where do we get the money to buy school clothes for the kids? Same thing, right out of their savings accounts. Most people, if you buy school clothes for your children, or any clothes basically, you go to the mall and you spend $1,000, well, then you have to send the government $300 on top of that because it's not tax deductible. And taxes are 30 cents on the dollar, national average. Well, if you do it the way I do it, score, government zero. You don't have to pay them that extra $300. People ask me all the time, Pat, how do you get your taxes to go from $62,000 a year down to $3,500? This is how you do it. There's not one single thing. It's a whole bunch of little things, and it's all about following the laws and categorizing your expenses the right way. You want to go to a movie, swing by the bank, pull money out of the kids' savings accounts, and take them to the movies. The money you put in their savings accounts tax deductible. Now the movie was tax deductible. Or if the kids want to go to summer camp or wakeboard camp or any of these summer camps that they can go to, take the money out of their savings account. Now their summer camp is tax deductible. Piano lessons, swim lessons, all that stuff. You want to take your family out to pizza, swing by the bank on Sunday evening, hit the ATM, pull the money right out of the kids' savings accounts, take the family out to pizza. And guess what? Dinner, 100% tax deductible. Where do you think I get money to buy their birthday presents? Same place. Okay? You can pay your kids for working for you, and it becomes tax deductible. If they earn less than $5,900 a year, they don't have to pay any taxes on it either. So how do I do my taxes? Well, every January I get a form that's called a tax organizer. And basically on this form it just says how much money did you pay your kids for working for you? Or how many business miles did you drive? Or how much money did you spend on advertising and promotion? Or how much money did you spend on going to Starbucks? Or how much did you spend on entertainment? Just all those questions, all right? They don't want your shoebox full of receipts. The only time you're going to need your receipts is in an audit. So when and if you ever get audited, the IRS auditor can say, well, let me see those receipts. That's the only time you're going to need your receipts. So I fill out this form, I sent it back to Scott's office, and they did my taxes for me. What I did was last year, I called Scott on the phone and said, Scott, I'm not sending it back to your office. What I'm going to do is I'm going to deliver it to you in person. Now, he lives in Colorado, and I live in Washington State. And he said, well, why do you want to do that? I said, well, I'm going to fly out there and meet with you because I want to go over everything and make sure that I'm not underpaying my taxes, and I want to make sure that I'm not overpaying them either. I want to make sure that I'm doing everything exactly the right way. So he said, fine, when do you want to come? And I had already checked with the airlines, and I could get a really good airline ticket, a price on an airline ticket on Friday, and it lands at 4 o'clock. in Denver. He said, well, that doesn't work because our office closes at 4:30. And I said, well, that's okay. I'll just stay over the weekend and then we can reconvene on Monday. How does that sound? And he kind of chuckled on the phone and he said, you've been reading my manuals, haven't you? Because one of the things, Scott has some different manuals. He has something called the Tax Deduction Business Kit that's where I've learned all this stuff basically. But in there, he goes over all the different things you can do and how to do them. It was kind of funny because one of the things that he had in there, one of the laws that Congress passed, now Congress wrote this. This is absolutely hilarious. And in his manual, he copied what is in the tax law, what Congress wrote. And so under weekends and holidays, it says, if either a weekend or a holiday falls between 2 business days, you guys, that happens every single week. Okay, Congress wrote this, remember that? If either a weekend or a holiday falls between 2 business days, the weekend or holiday is considered to be a business day and is tax deductible. That's amazing. When was the last time your accountant or CPA told you that one? Okay, so what I did is I jumped on an airplane and flew to Colorado. Scott picked me up at the airport. We drove for 2.5 hours, had a business meeting in his car, and we drove up to Keystone and Breckenridge. You know, he just happens to have a condominium up there at the base of Keystone, a little town called Dillon. And so we stayed there Friday night, Saturday night, and Sunday night. And he charged me $200 a night to stay there. Can you believe that? But guess what? He also paid for my lift ticket every day and all that. So I got the tax deduction for the lodging because I was there on a business meeting. He doesn't have to report it as income. He paid for my lift ticket and got a tax deduction for entertainment for buying my lift ticket. So it was just a win-win situation all the way around. You know, is it reasonable to have a business meeting in a car or on a plane or on a train? Sure. You can have a business meeting wherever you want. It doesn't make any difference, okay? So where is it reasonable to have a business meeting? Well, Congress came up with a list, basically, of 30 different places. This is in the tax code. There's about 30 different countries that you can go to, and it's reasonable to have a business meeting. There's Barbados, Bermuda, Canada, Costa Rica, Guam. Again, this is all in Scott's manual. There's Honduras and Jamaica and Mexico and Micronesia. There's Puerto Rico and USA. Where's Hawaii? USA, all right? There's the U.S. Virgin Islands. There's, you know, so you can go to any of these places and it's considered by the IRS to be reasonable to have a business meeting there. So you can do that. What about cruises? Well, cruises basically are not tax deductible unless it's a U.S. registered ship, all ports of call are in the United States, and you spend more than 50% of your time in business meetings. Well, none of the ships out there, none of the big ships that I know of anyway, are registered in the U.S. They're all registered overseas. And I really don't know of any where all ports of call are in the United States. Unless I think there might be one ship that just goes around the Hawaiian Islands. I'm not sure, okay? And who wants to spend 50% of your time in business meetings? So pretty much cruises are not tax deductible. But here's the cool thing about the tax code. Like I said, it's over 80 or 76,000 pages thick. Well, if you read something in there you don't like, keep turning the pages and pretty soon it will contradict what it just said. So here's something else that Congress wrote. If you use an ocean liner, cruise ship, or other form of luxury water transportation instead of a plane, train, bus, or car to reach your business destination, there's a limit of $680 per day you're permitted to deduct. Now, because it's the first part of the year, it looks like that $680, that's going to be upped for this year. And they're talking about making it over $700 per day that you're permitted to deduct. So anyway, we have to keep our eye on that. But right now it's about $680 per day. And it looks like it's going to go up to over $700 per day if you use it as a mode of transportation to and from your business meeting. Well, whose job is it to categorize it like that? It's your job. You know, if you just give a receipt to your tax preparer saying that you went on a cruise, you're not going to get a tax deduction for that. But if you gave him the receipt and said, I use this as transportation to and from a business meeting, it's going to be about $700 a day that you're going to get a tax deduction on that. So you need to know this kind of stuff. It's your job to know this. Here's Greg and Eva. Eva is my sister-in-law. That's my wife Carrie's sister and her husband Greg. They recently moved back up to the Pacific Northwest, and Eva works at a doctor's office. Greg works at a credit union. And when they moved up here, whenever you have a job, you have to fill out a form called a W-4. And on that W-4, it says, how many allowances or exemptions would you like to claim? And the more you claim, the more take-home pay you get, the less they withhold out of your paycheck. The problem is, at the end of the year, if you claim too many, then you didn't have enough money withheld out of your paycheck, and you're going to owe money in taxes. And that's exactly what happened to Greg and Eva. It says, our CPA prepared our taxes and told us we owed over $6,000 in addition to what we already paid in. Patrick set us up with Scott, and after we recategorized our expenses the right way, we ended up receiving over $8,000 in a refund. That's a $14,000 difference in our pocket. We are so thankful for Patrick and Scott. Basically what I did is I told Eva, I said, Eva, you need to get Scott's manual. He goes through all this different stuff in there. He shows you how to categorize everything. You guys probably do not owe that $6,000. So they got Scott's program and went through it all, recategorized everything, and sure enough, they did not owe the $6,000. They ended up getting an $8,000 refund back. Okay, and that's after their CPA had already done their taxes and said they owed $6,000. So here's something else you need to be aware of. Audit rates are skyrocketing. There's way more audits today than there's ever been before. And a lot of the reason is because of the deficit. They have to generate income to offset this huge deficit that we have. So this came from CNN Money. More Americans than ever may be subject to unwanted attention from the Internal Revenue Service this season as the government pumps billions of dollars into tax collection. It's on Bloomberg. U.S. audit rates almost double for U.S. taxpayers. MSNBC, deficit could cause more IRS audits, experts say. And then down in CBS News, we saw individual audit rates increase, reaching the highest rate in the past decade. All right? So it's all over the place. So how are you going to become audit proof? Well, in Scott's program, he has something called the tax tracker. And the tax tracker basically is everything the IRS requires as far as you tracking your expenses and your mileage. So here's what was put together. This is basically one page out of mine. Now I scanned this in, and when I scanned it in, you couldn't really read my handwriting. So I retyped everything to make it nice and neat so you guys could read it. The actual one that I have, this is the exact information, but I hand wrote it and you couldn't read it when I scanned it in, so I just retyped it for you, so it made it easy to read. So on October 17th, I went from home office to Starbucks RT. RT is round trip. Why did I go there? I met Ralph Nadeo to talk about our medical insurance. It was 9 miles there, 9 miles back, so that was 18 miles, all tax deductible, and I spent $10. That $10 is tax deductible. Later on, home office to Nordstrom's round trip. Why did I go to Nordstrom's? Because the company had to buy a gift certificate to give to somebody as a bonus. Well, it was 14 miles round trip and the gift certificate was $200. And then later that night, or later that afternoon, Carrie, my wife, and I went to Toby's office. Toby's an attorney. We were dealing with some real estate contracts. 28 miles to his office. After we had that business meeting, we went to dinner at the Metropolitan Grill. Is that business meeting within 24 hours, or is that dinner within 24 hours of the business meeting? Absolutely. So is dinner tax deductible? You bet. So, and then after dinner, we actually went to go see Phantom of the Opera. And Phantom of the Opera was at the Paramount Theater. Okay, so there's the Paramount Theater in downtown Tacoma. Phantom of the Opera is playing. So we went to go see Phantom of the Opera. Could that be considered entertainment? You bet. Well, is entertainment tax deductible if it's within 24 hours of the business meeting? Yes. So, and again, you guys, all of this stuff is outlined. It's detailed in the tax deduction business kit that Scott has. And I'm going to show you how to get one of those in just a second here. So, but bottom line is, just on this one page, there's $599.45 worth of tax deductions plus the mileage. So that's how you do it. The tax tracker was designed specifically to help you comply with all the IRS mileage and expense regulations. Okay. There's also a summary book that you get with it. So at the end of every month, total everything up and put it in the summary book. There's 12 pages in the summary book, one for each month. And there's also a envelope at the back of every month also where you can put your receipts if you want to. Here's another really good friend of mine that ran into a little audit problem, so I referred him over to Scott also. It says, recently I received an audit notice for over $100,000. How'd you like to get an audit notice for 100 grand? And the IRS was going to come to my house. I called Scott, and the next day I received a phone call from the IRS saying they were sorry and they're not coming over. Scott is absolutely the best. Everyone needs his program. We won the audit. So Robert is very, very, very happy, and he's now having Scott do all of his stuff for him. Before, he had a CPA firm do it. And then he got audited. Here's one of the last things I want to talk to you about, and it's how to get your money back over the last 3 years. So any money that you've paid in taxes above and beyond what you legally owe is actually a donation. And a lot of people donate money because they don't take all the tax deductions they're legally entitled to because they don't know about them or they don't know how to categorize things. Well, once you learn how to categorize things the right way, you can go back over the last 3 years and recategorize everything and submit a form to the IRS, and they'll refund your money for you if you have any money coming back. So on this, I put down $30,000 in the next 30 days. All you have to do is ask for it. Let me show you what I'm talking about. There's a CD called 99 Ways to Beat the IRS with a 3-Year Review. Scott put this together. He just updated this the very end of 2012. So this is a fairly new CD right here. It's only a couple months old. And he updates it about every 18 to 24 months, something like that. So it was just updated for you. What I want you to do is take this CD, take about 45 minutes of private, quiet time, plug the CD in, take out a couple pieces of paper and list 1 through 99. Scott's going to go through the 99 most common things that people have missed on their tax return, and you're just going to make notes. And then what you're going to do is you're going to download a form from the IRS website. Just go to irs.com, click on the link that says Forms, and there's a form called a 1040X, like the letter X, and you're going to download that. In fact, you'll probably download 3 of them. Let me show you exactly what I'm talking about here. Do you guys all remember back in 1998 I showed you a copy of my tax return where I paid in $20,000 and then got a $5,000 refund? Okay? Well, 2.5 years later, I found out about this 3-year review. So I had just a couple months left before I could do this 3-year review. So I did what I just told you to do. I went in and I got a 1040X, okay? And I listened to the CD, I went through all the different things, and I found out that my mom and dad's accountant who did my tax return actually did a perfect job, but the problem was I gave him all the wrong information. So when I recategorized everything the right way, I found out that I had actually overpaid my taxes by $13,730. So I'm going to get $13,730 back from the $15,000 that I paid in. And so I was pretty excited about that. So I did all the paperwork, sent it in and everything, and refund $13,730. And when I got the check back, I was very, very surprised in a good way, okay? Because what they did is they actually added almost $4,000 of interest to the check they paid me. So check it out. I paid in about $15,000. I got back about $17,000 because of the interest. You see, they're required by law to pay you interest on the money that you accidentally overpaid because you didn't know of all the tax deductions. So it's just like if you owe the IRS money and it was late, you have to pay them interest. Well, if they have your money and they have to refund it to you, they'll pay you interest also. That's the way the laws are set up. So anyway, every single one of you on this webinar can qualify for this. You just need to know what to put on that 1040X type thing. So bottom line is this, you guys. I paid about $3,995 to learn all this information. When I was on the phone with Scott, that's what happened. So I paid almost $4,000 to learn how to categorize my expenses the right way. Bottom line is, just in the first year, it saved me over $56,000 in taxes. Just the first year. And it's saved me that much or more every single year since then. So the only difference between where I am and where you are is I took the initiative and I did something about this because I found out about it, 12 years ago or so. And you guys are finding out about it right now. So I'd say jump on board. Let me tell you exactly what Scott's program is. He has the Tax Deduction Business Kit. There's over 100 different tax tips and different strategies in here. There's a manual, there's a CD set where Scott goes through each one of the chapters in the manual. The manual teaches you what the tax deductions are, and it references tax code and everything else. The CDs are Scott teaching you how to implement them into your life. You're also going to get the tax tracker book so you can track all your expenses and all your miles and everything the right way. The different topics in the CD set, the IRS and you, there's criteria for deductions, gifts, keep on giving, how to write off gifts. There's all kinds of different topics that Scott goes over. And every one of these things, there's many, many, many tax deductions attached to it. So you need to get his program and get the manual so you can start only paying what you legally owe and not one penny more. And he even has stuff on retirement plans and 401k plans and stuff, and how to maximize the tax deductions for all that. It actually increases your rate of return when you're able to save money on the taxes with all that stuff. And like I said, there's the complete tax tracker system along with the summary book that's included with that. You're also going to get the free bonus. Free bonus number 1 is the 99 ways to beat the IRS with a 3-year review. This is the one where you're going to go in and listen to it and make a list of all the things that you've missed on your tax return. Put those items on that 1040X and you'll be able to get a check back in the mail also. Free bonus number 2, this one's huge. There are so many changes coming out with the tax code right now, it's unbelievable. And nobody knows exactly what's going to happen over the next year or two, especially with this whole financial cliff thing. And, who knows what Congress is going to do. So what Scott's doing is he is doing a training once a month. Typically it's the first Tuesday of every month. He does about a 20 to 30 minute webinar that is 100% training. There's nothing for sale. You can't buy anything. He just wants to train everybody and keep everybody up to date who has his program. And normally he charges $600 per session to be on this webinar. Well, if you get his session from this webinar that we're doing right now, if you're one of the first people that get this, Scott's going to include this for your lifetime for free. You'll never be charged for it. And it's every single month. So you will never, ever be out of date. Here's what else happens. After he's done teaching the webinar, he basically opens up the lines and people are able to ask questions. So how would you like once a month to have all your tax questions answered by the former senior trial attorney for the IRS? Okay? That's included for anybody that gets his program today.
This is one of the last slides I want to show everybody. And folks, this can save you so much money. Every single one of you need this program, no question about it. On this chart, like I showed you earlier, look on the left-hand side, see how much money you make annually. If you're married or if you're a couple, it would be you and your significant other, your spouse combined. Over on the right-hand side, that is how much money this program saves people on average. That's the national average on how much it saves people. Why I highlighted the $80,000 was because when I showed you my tax returns, my personal tax return, it showed you that I was making $80,000 a year on my personal. Well, when I had my mom and dad's accountant do my taxes, I paid in $20,000 and got a $5,000 refund. I paid in about $15,000. The very next year, once I learned how to categorize all these expenses the right way, they paid in $19. So this program, this is really accurate because this program actually did save me $15,000 on that $80,000 of income. Even with that 3-year review, remember the 3-year review I showed you just a minute ago from that first year? On my 3-year review, when I did pay in the $15,000, I actually got my $15,000 back. So look on the left-hand side, and if you're at $120,000 of annual income, this program will save you $21,400 a year, every single year for the rest of your life. The only difference between where I'm at and where you're at is I heard about this about 12 years ago and took advantage of it. And it has saved me literally hundreds of thousands of dollars every single year ever since. So let me show you how you guys can get this. For those of you that want it, you need to order now because there's only 20 of these available at this special price. Stock's willing to give everybody a 75% discount if you're one of the first 20 people that order. So instead of it being $3,995, that's what I paid, you can get it now for only $997, and it's tax deductible to you, all right? So what you need to do is go to www.callwithpat.com. Isn't that right, Jeff? That's where you want people to go, right?
Yes, that's correct. www.callwithpat.com.
Right. And the phone number is 800-574-9221. So, and there's people manning the phones right now, I guess. So, Jeff, what do you think of this whole program?
Yeah, this is awesome. There's definitely some great tax deductions there, and I can tell you what, folks, you need to take advantage of this because you either can pay the IRS or you can put that money in your own pocket. Okay?
Yeah.
Tax season is right around the corner. Actually, we are in tax season right now. The filing deadline is April 15th. So take advantage of this program. Put that extra money in your pocket. Take a vacation with the family. Pay for your kids' college education. Whatever you want to do with the money, but keep that money in your own pocket. To sign up, again, go to www.callwithpat.com. You can call 800-574-9221. We do have operators standing by. The first 20 people will be able to take advantage of that 75% discount for only $997. Pat, I tell you what, I'm completely blown away with all your information. You know, most people, what they do is they just go to H&R Block, they pay the, $59, $69, and they're leaving so much money on the table.
One of the things with H&R Block or Jackson Hewitt or any of those companies like that, you know, they do a great job if somebody just has like a 1040 easy or something where there's no deductions, there's no anything. And but you know, if you have any type of deductions at all, you definitely don't want to do that. I wouldn't recommend it to anybody. The other thing, Jeff, is, you know, this $997 for this program, really it's not, for two reasons. Number one, it's tax deductible to you. But the other thing is, you get the program, you're going to save literally thousands and thousands and thousands of dollars on your taxes every single year for the rest of your life. Okay? This is way more of an investment than it is an expense, no question about it. You guys are going to end up paying, everybody's going to end up paying that $997 10 times over in taxes, and you're just giving it to the government because you're not capturing all the deductions you're legally allowed. So learn how to take all the deductions that you're legally allowed based off of the laws that Congress passed. Let the former senior trial attorney for the IRS teach you how to do that, and you will absolutely, positively be money ahead every single year for the rest of your life, no question about it.
Hey, really fast, I want to congratulate John Myers from Los Angeles, Lisa Richards from Orlando, Jay Rodriguez from Dallas, Dennis Ellers from San Diego, and Ruben Hernandez out of Kansas for signing up for your program, Pat. Folks, again, to sign up, you can go to www.callwithpat.com. You can also call our office at 800-574-9221. Be one of those first 20 people to sign up and receive that 75% discount. Pat, I want to thank you for coming on the call here. This program is awesome. I tell you what, again, I've met a lot of your students in my travels, and the information you're shared here on our call is just fabulous. Folks, be one of the first 20 people. Sign up, get your discount, save money on your taxes, and put that money in your pocket.
You bet. Jeff, thank you so much for having me. It's always a pleasure, and we'll talk with you a little bit later. Folks, again, thank you so much for taking the time, and be proactive. Get the program. Start saving money. You know, it's up to you if you're going to do it or not. So thank you so much.
Hey, thank you, Patrick.